My dear friends, RBI's draft gold loan guidelines not only affecting the common people, in fact, these guidelines have put hardship on the banks as well. Gold loans are the most safest loan which is provided to the common people. All these households have retained the gold over a period of time only for an emergency purpose. It's literally making the bank as a jeweler where they wanted the banks to give not all gold items are eligible for loan. Reserve Bank of India is asking the banker to provide gold purity certificate. Many of them are thinking these guidelines are advised by the Ministry of Finance. The point to be noted here is who will be the first affected party is people who do agriculture from the draft guidelines, but this is not sufficient. It should go up to minimum 20 lakhs. My dear friends, if you are applying for a gold loan, there are some updates for you. My dear friends, RBI's draft gold loan guidelines was released on April 9, 2025. From then on, various political party leaders have raised concerns about Reserve Bank of India guideline. The reason why they have raised concern is that these guidelines are not only affecting the common people, in fact, these guidelines have put hardship on the banks as well. Indeed, if you see in the loan sector, people who know about the banking sector definitely will endorse that gold loans are the most safest loan which is provided to the common people. In fact, gold loan never gets defaulted. Even if it gets defaulted, it's easy to liquidate. When that is the scenario, why is the Reserve Bank of India coming out with the draft guidelines regulating the gold loans? Always there are guidelines of the Reserve Bank of India on the gold loans, but this draft guidelines, they have brought stringent mechanism to ensure in this draft guideline, there are hardship for getting gold loans as well. My dear friends, considering all this factor, Union Finance Minister Mrs. Nirmala Sitharaman has given observation to the Reserve Bank of India to relax these guidelines for small ticket borrowers. Not only that, Union Finance Minister has also requested the Reserve Bank of India, which is formulating monetary policy, as part of the recommendation from the fiscal policy perspective, they have said that these guidelines has to be postponed to 2026. The question here is, why 2026? Why should the guidelines be postponed to 2026? Point number one. Second, what is the significance of the year 2026? However, the point to be noted, in these guidelines, there are key proposals. There are 9 significant proposals as part of the Reserve Bank of India gold loan guidelines. The first proposal is with respect to loan to value capped at 75%. If somebody takes a gold valued at 1 lakh to the bank for the purpose of availing a loan, then only 75,000 rupees will be provided to the borrower. The lender cannot provide more than 75% of LTV. This is definitely an hardship. If you see today, most of the gold loans, nearly 90% value is provided as a loan. In fact, golds are an increasing trend. The markets is also showing an increasing trend. But the question here is, why is Reserve Bank of India capping LTV to 75%? And what is the rationale behind capping at 75%? Because if somebody carries a gold, a value of 1 lakh, only 70% a loan is provided on the LTV, definitely it will not be beneficial for the borrower. Second important guideline is proof of gold ownership required. My dear friends, it is said in the guideline that people who take gold loan, when they pledge the gold, they have to provide invoice or purchase receipt along with the gold. But the point to be noted, the major chunk of gold in this country is inherited by generation to generation. With respect to the old golds, there may not be an invoice. So for that, the Reserve Bank of India, as part of its draft guideline, has said they have to file an affidavit or a declaration. This affidavit will definitely have notary public getting attested. In that case, in future, if any problem comes in the gold, there is a possibility the banker may sue the customer based on the affidavit filed. My dear friends, if you see, Honorable Finance Minister late Shri Arun Jaitley in 2015 gave a very important statistics wherein he said India has totally, the household gold is totally 22,000 tons to 25,000 tons. And he introduced gold monetization scheme saying all this data, and that gold monetization was very attractive. The point here is, when that is the kind of gold holding by the household, and all these households have retained the gold over a period of time only for an emergency purpose. But if these kind of stringent guidelines are provided, it will be not beneficial for the borrowers, and definitely they may not even approach the bank for getting a loan. Third important aspect is borrowers to receive a gold purity certificate. This guideline of providing gold purity certificate by the banker makes the banker literally like a jeweler. The point here is there is a borrower who takes the gold to the bank and the bank decides its value and lends the loan. Here, the Reserve Bank of India is literally making the bank as a jeweler where they wanted the banks to give gold purity certificate. The point here is certificate means true and correct. Why should the banker be given this kind of obligation, that to a certificate and not even an opinion? When it is a certificate, the bankers will generally restrain themselves from issuing the gold purity certificate, because there is a possibility that if the gold purity certificate is wrong, then the banker will be in trouble. Accordingly, they may not even lend on the gold where purity is even higher. So why should the bank take this obligation? So Reserve Bank of India, by mandating to say that bankers should provide gold purity certificate, has put the bankers into trouble, and not only trouble, it will ensure there is a lot of hardship in lending loans to the borrower. So definitely Reserve Bank of India should reconsider this guideline, considering the fact there cannot be a certificate that can be issued by a banker. Why should a banker issue a gold purity certificate? He is not a jeweler. He is not a technical, they don't have a technical expertise. Probably they may rely on experts to get the certificate and subsequently give it to the borrower. But bank cannot issue gold purity certificate. That is not legally binding as well. The fourth important draft guideline with respect to gold loan is that only specific gold items are eligible as collateral. My dear friends, if you see, not all gold items are eligible for loan. In fact, they have clearly told only gold ornaments and special coins issued by the banks like MMTC gold coins are eligible for gold loan given by the bank and NBFCs. My dear friends, when you look at it, what is not eligible gold item, if you examine and see, gold bars, ingots, biscuits or any unfinished gold item or gold form is not at all eligible for loan. Only gold ornaments, that too removing stones and other beautification items around the ornaments will be removed. Only the solid gold will be weighed and only those value will be provided as a loan. Considering this, other forms of gold items are not permitted and the bankers cannot lend. By the way, the point to be noted here is even gold backed products like gold FTFs or even gold mutual funds or gold monetization scheme certificate are also not eligible for the purpose of availing loan from the bank. The fifth important draft guideline is loan against silver is now allowed. It is a welcome sign, but however, they have clearly said those silver which has a purity of 92.5% is alone eligible for loan. Even in silver, the silver bars or silver backed financial assets, bullion or slabs are not allowed for the purpose of availing the loan. Only silver ornaments, silver utensils or silver items which is not a bar or a bullion or a financial asset is only eligible for availing a loan. So even though silver is brought within the scope of lending, but however, this guideline defeats the purpose. My dear friends, yet another important guideline which is an hardship for the borrower as well as lender. The Reserve Bank of India guidelines has clearly provided for the limit on quantity of gold coins and ornaments. My dear friends, the draft proposes to say only 1 kilogram of gold and 50 grams of gold coins, even special gold coins, are eligible for availing loan. My dear friends, sixth important draft guideline of the Reserve Bank of India with respect to gold loan is that there is a limit on the quantity of gold coins and ornaments. My dear friends, it is clearly said that a borrower, when he pledges the gold, he can only pledge up to 1 kilogram and 50 grams of gold coins. That too issued by the recognized bank. When this is a condition, so no lender can lend beyond 1 kilogram of gold and 50 grams of gold coins. It's a real difficulty because there could be a possibility the village could be connected only to one lender. There may not be multiple banks or NBFCs surrounding a village. So it definitely affects a common man to an extent to say that if he is going to pledge about 1 kilogram of gold or 50 grams of gold coin, he is only eligible to the extent of borrowing, then definitely this is going to cause difficulty for the borrowers. So this cap, what is the rationale? Why is this cap kept by the Reserve Bank of India? Is not justified in the guidelines. My dear friends, seventh important guideline is with respect to standardized gold valuation method. My dear friends, Reserve Bank of India, as part of the draft guidelines, has provided a standard method to value the gold, where they have said very clearly, even if the gold purity of the gold is 18 carats or 20 carats, it has to be valued at 22 carats. My dear friends, even though it's a welcome sign to value a gold without purity at par with 22 carat gold, but it puts an hardship on the bank, and it also a kind of a risk for the bank to actually lend over golds which are impure to an extent where it is 18 carat or 20 carat gold. So when this condition is imposed, definitely banker will be reluctant to lend, because it is also coupled with the condition that the banker has to provide gold purity certificate. So there could be questions or audit objections later by the Control and Auditor General of India or by their own statutory auditors or internal auditors. Why did the bank lend at 22 carat purity when the gold purity is not at par with 22 carat? Definitely it is a hardship for the banker to lend. Very important moot point of observation is that Reserve Bank of India is asking the banker to provide gold purity certificate. When they are asking to provide gold purity certificate wherein they certify saying true and correct, then why is the Reserve Bank of India asking the bank to treat 18 karat gold, 22 karat gold at par with 22 karat gold? Then how can they issue a certificate? So because of its hardship, definitely banker may not lend to the borrower when the purity of the gold is in question, like 18 karat and 20 karat. So definitely they will take a conservative step and lending may be affected. My dear friends, as part of the guideline also clearly says there has to be a detailed loan agreement to be provided. It has been made mandatory. So no more a simple loan agreement. The loan agreement should have all the details of the gold, inventory of the gold, purity of the gold, and it has to mention clearly the items and ornaments, what is excluded, what is not included. And this is definitely a hardship. Literally, the banker will be made like a jeweler to lend to the borrower, and this hardship will ensure that the banker may not even lend to the borrower. Ninth important point of the Reserve Bank of India draft guidelines is that, my dear friends, it says very clearly timely release of gold collateral. This is a very important and a favorable point for the borrower, wherein when the borrower has settled his loan with the bank, then in that case the banker or the NBFC has to return back their gold within 7 working days from the day he settles the gold loan. My dear friends, any default to return back the gold within the specified time limit of 7 days will attract 5,000 rupees per day as a penalty for the banker. Considering this scenario, definitely banker won't delay, definitely return back within 7 days, and by returning back within 7 days, the banker can avoid the penalty. These are all the key proposal of the Reserve Bank of India guidelines with respect to gold loan, my dear friends. My dear friends, these guidelines as a whole, if you read, you can understand very well. Literally, the banker may not even lend to the borrower by taking gold as gold in the form of pledge. The reason being, the guidelines are a stringent regulation, and definitely banker may not be able to comply most of this regulation. It will put the borrower into a hardship. But a very important and appreciative point to be noted here is the Ministry of Finance has clearly provided review points to Reserve Bank of India, which brings the monetary policy. We all know Ministry of Finance, Government of India brings out fiscal policy, and RBI brings out monetary policy. Many of them are thinking these guidelines are advised by the Ministry of Finance. The point to be noted here is Ministry of Finance has no role with respect to this Reserve Bank of India draft guidelines with respect to gold loan. In fact, the Ministry of Finance has also raised certain reservations, and they said that only in 2026 this has to be implemented. The point here is, why 2026? Next, why should the draft guidelines be implemented only in 2026, and why not in 2025, or why not in 2027? What is the significance of 2026? Very, very important point to be noted. As part of the observation the Ministry of Finance has provided, they have said small ticket borrowing up to 2 lakhs will be exempt from draft Reserve Bank of India guidelines. This puts to a question, even though 70% of the gold loan borrowers are coming below 2 lakhs, but the gold values are increasing tremendously. And when the gold value is increasing, and Reserve Bank of India as part of the draft guidelines have provided standard valuation method, even treating golds which are with the purity of 18 karat and 20 karat at par with 22 karat, definitely puts into a question of valuation. So small ticket borrowing may be exempted up to 2 lakhs from the draft guidelines, but this is not sufficient. It should go up to minimum 20 lakhs. For example, my dear friends, Ministry of Finance knows very well that Mudra scheme bought by the government provides collateral-free loan up to 10 lakhs, 50,000 to 10 lakhs under Sishu, Kishore and Tarun. When there is a loan facility available without a collateral under Mudra scheme for micro entrepreneurs, when there is a collateral-free loan provided by the Government of India as part of the Vidya Lakshmi scheme, but with respect to gold loan, these guidelines are exempted only up to 2 lakhs. Definitely this is a lower limit, enhanced to say up to 20 lakhs, it's a small ticket borrowing. My dear friends, because of this draft guidelines, who will be the first affected party is people who do agriculture. Because people who do agriculture, they pledge the gold and take agriculture loans and do farming. But whereas if these draft guidelines are provided, the inherited golds, they may not even have invoice, or they may not even have a purchase receipt. In that scenario, it will be very, very difficult for the farmers to do farming by pledging the gold with an agriculture bank. Next important observation is that this is not just applicable to the banks, even this is applicable to non-banking finance companies. The point to be noted here is, if these kind of stringent draft guidelines are provided, what will happen is the customers may tend to move to private financiers who may charge very high interest, and in fact usurious lenders may be sought by the common borrowers. So I think the Government of India, Ministry of Finance, who brings fiscal policy, has clearly reviewed the draft guidelines issued by the Reserve Bank of India and has given its recommendation and review points to the Reserve Bank of India. Indeed, all the state finance minister, instead of representing to the Ministry of Finance, it is very important, state chief ministers can even write directly to the Reserve Bank governor to say how these draft guidelines with respect to gold loan will affect the economy, not just economy, but also the common borrowers who are all farmers and micro entrepreneurs, and certain times family may borrow for education. We all know that majority of the people in this country pledge their goals to get educated. So government has very less role with respect to education loans. Then these hardships will definitely put the common people and poor people and marginal people and people belonging to aspirational sections of the society into a great trouble, because the goal that they have, the asset that they have, will have a less value if these guidelines are brought in. My dear friends, Government of India should take necessary steps to see to that the Reserve Bank of India doesn't implement the draft guidelines. Whereas if you see the Ministry of Finance recommendation, they have said to postpone. I would say they have to review and clearly say that Reserve Bank of India should completely remove most of this difficult condition which could be a hardship for the common borrower. Thank you.